Good day, YouTube. This is Jay Money with Falling Forward Financial. Just another article here on MJ. This is the one that I've got two stocks that I've been talking a lot about here as of lately. So inside this article, there's two MJ stocks that I've talked about a lot here lately in regards to a reverse stock split being delisted. Up until this article, I've been talking about them being delisted, and this is going over as a reverse stock split coming for these two MJ stocks. And as you can see, this is just 7 hours ago. A stock split doesn't do anything to your investment besides changing the number of shares you own. Your overall investment dollars remain unchanged by a split. It's a discretionary move, and while some businesses, including Berkshire Hathaway, like keeping their share prices high, others like to split to get their stocks to bring down their prices so they look more affordable to retail investors. When a stock is struggling, however, a company may deploy a reverse stock split where it takes investors' shares and gives them fewer shares in return. While this again won't change your overall investment, it can be a bad sign that the stock is struggling. Two MJ stocks that potentially take such moves in the near future are Sundial and Hexo, and I've been talking a lot about these here as of lately. February 7th, Sundial was supposed to be above $1. I believe I just read in an article on a video that I just did, why Canopy grows Sundial and Aurora. Is what it's titled, so you'll want to watch that one, but that one did say that Sundial did get an extension, so in that particular video, it is looking inevitable that Sundial will need to a reverse stock split to stay on the NASDAQ. The company received a warning from the exchange last year that it had fallen below $1, a threshold that needs to stay above in order to remain on the exchange. This isn't new territory for the company, and it was in danger last year as well, but the meme hype and excitement from retail investors sent shares of the stock surging to nearly $4, alleviating the concerns. So I do remember that. I wish I would have sold out, probably like everybody else listening here, and maybe you did sell out and rebuy in, so that would be a step going forward. However, that did not happen for me. This time around, there is no meme hype helping the stock turn its fortune. Around February 7th was the deadline by which the stock needed to regain compliance. This week, the company announced that the NASDAQ granted an extension, which would give it until August 8th to satisfy the exchange minimum bid price requirement. But with Sundial shares trading at less than 60 cents, it had a long way to go to getting to $1. And a reverse split may still end up happening this year. In May 2020, rival producer Aurora used a reversal 12-1, and I'm still way in the red, totally screwed on that one. I think my cost basis on that one is 50 something. I haven't looked at Aurora since. However, I just did a video about Canopy, Sundial, and Aurora, so, but just gonna keep it. It's in the red, so. But Aurora did a 12-for-1 stock split to inflate the share price and remains listed on the New York Stock Exchange. Today is 2-1 of the NASDAQ. Such a significant reverse split has allowed Aurora to remain well above $1, even though its stock has tanked 67% over the past year. That is more than Sundial's decline of 55%. Question is, for Sundial may be a matter of what its split ratio looks like. For investors, it won't make Sundial more or less riskier than it is today. The company, which has incurred losses of 239 million Canadian dollars over the trailing 12 months, and that has been acquiring retail MJ businesses as of late, and still has a long, uncertain path forward. And the problem is that the price to sales multiple of 21, it could continue to decline further even after the reverse split. Aurora trades at just 4 times its revenue and is much cheaper stock by comparison. Next we have Hexo. I've done quite a few videos about them. I did one just, I believe yesterday. They had a really good day. They were rising about 7 to 10%, if I remember right. Hexo received a warning letter from the NASDAQ just last month, so it is still plenty of time to regain compliance, 180-day calendar days with a deadline of July 25th, which may be extended. If it can stay closer to $1 for 10 straight trading days before that date comes, it will be fine. Around 65 cents. Hexo stock is closer to the dollar price today than Sundial's is. However, getting to that price point would still require more than a 50% jump in where it is today. So we'll just have to wait and see on that one as well. Without some significant earnings, a surprise, or a development in the MJ industry that sends all MJ stocks soaring, it may be too high of a hill for Hexo to climb. So again, just have to wait and see on both of these. The company previously deployed a reverse stock split in December of 2020. At that point in time, I believe I had a $17 cost basis, and I've gotten that down to $1 something now. So totally in the red on that one as well. So again, Hexo did a reverse split in December 2020, and like I said, my cost basis at that time was $17. I didn't touch it just till a couple months ago, and got my cost basis down to $1.16, $1.20, whatever it is now. Like I said, I just did a video on it yesterday, so you can go ahead and watch that one as well. With every 4 shares it took from investors, it gave back 1. So had the company been more aggressive with the reverse split, like Aurora with its 12 to 1, Hexo wouldn't be looking at the prospect of doing another one now. But regardless of what the multiplier is, the problem remains the same. A falling share price. Hexo stock has declined a mammoth 92% in just 12 months, and I do remember that from my previous Hexo video. And in October 2021, to add to bearishness, the company's auditors raised concerns that Hexo did not maintain, in all the material respects, effective internal control over financial reporting, and expressed doubts about the business venture. Although they did have a good day yesterday, so I was really surprised. So Hexo has struggled to stay out of the red. Its losses are over a trailing 12-month, 228 million Canadian. Difference is that Hexo wasn't a meme stock last year like Sundial that benefited from the inflated price, allowing it to raise money, cashing in from the high valuation. Hexo had cash and cash equivalents totaling $56 million at the end of October 2021. Sundial had more than 10 times that amount. So that's what's always killed me about Sundial, even though the stock price still sucks on it and can't get it up above $1. So, although that won't make the business any riskier, it will indicate that Hexo's prospects haven't significantly improved from where they are today. So, again, I've been doing a couple videos about legalization sweeping over North America, 15 states plus Washington, D.C. You'd think having Washington, D.C. be legalized, that would be enough for all 50, but I guess not. Have all legalized recreational MJ over the past few years, and full legalization came to Canada in October 2018. I will tell you my favorite MJ play right now is High Tide, ticker HITI. You can find that in my library. That one actually is positive, and I think I'm still have a profit on that one. So just wanted to throw that out there as well. But this is it for Sundial and Hexo. If you feel a reverse stock split is coming, go ahead and leave your comments. Those are always welcome. And if you have Hexo or Sundial, list that in the comments along with your cost basis. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.